Hello everyone, it is Sterling here from Day Trading Forex Live. We are back for another month-end review. This is the December month-end review, and we'll be going through all the trades in December of 2015. This is going to be the 8th video in the video series that I started in May, going through every valid trade for the euro dollar and the pound dollar. Our strategy, just to preempt the question that I always get with these videos, our strategy can be used on any other pair and also can be used in other markets. For those of you that are DTFL members, you know I trade a stop run based setup in the equity market as well. So very universal setup that can be applied across the board. A quick analysis of those past videos, if this is the first one you're watching, this is the month-end results from those videos. You can check out those videos under the recent trades tab of the site. And you can watch, the May video, see how we came to that number, June, see how we came to that number, etc., etc. December was a very mediocre month, only 3.5% gain, and it was only a 3-week month, so we left out 2 weeks of trading because that's obviously a holiday market. That time we do not trade. So with December included, we are now up to 178% compounded gain. Again, it's important to understand I'm referencing that as a compounded gain. So let's go ahead and get into the December video, show you exactly how we got to that 3.5% over the course of the first 3 weeks of December. All right, to start out the month, we had a little bit of a unique start to the month, and the reason I say that is we had opposing setups, not a very common thing, but we do have a criteria or a rule set that determines how we deal with that scenario. When there is an opposing setup, when you're talking about between the euro dollar and the pound dollar, we exit the first trade, go into the secondary trade. That is how it should be traded with a proper application of the rule set. So in this case, we had a level. Our first upper level that we had on the euro where this trade came from was the 0631. So just to illustrate that, here's the daily market preview. This is in the members area. So here's our members forum. This is under the daily market review section. And we'll go back here to December. Whoops, up here. And so on December 1st, we had a level, euro dollar upper level, 0631. That was the level that we had pre-selected. This video probably came out around midnight Eastern. Trading starts at 2 o'clock for our strategy, that is. And video also has a YouTube timestamp, so not like I'm going back cherry picking these levels. That's all pre-selected. So going into that day here, 0631 again is that point. So that was our level. We came into it. The level was pre-selected all the way back here. This is the Asian session. So we went all the way through London, the European and London session, and then came into that level at 1700, which is 10 a.m. Eastern. So a full 10 hours later, we come into, or 8 hours later, I should say, we come into that level. We create a stop run. We confirm down. Now, in this case, the entry was 15 pips from the high. This got to 14.7, 14.8 pips from the high. So hit the entry criteria, and the exit was on this candle right here, the 1815 candle, which is the 11:15 a.m. Eastern candle. The reason the exit was at the close of that candle, so it would have been right here, is because of the opposing setup, what I just mentioned a few minutes ago. So the exit for this trade would have been somewhere around 3 or 4 pips. I just said 3 pips for record keeping purposes, and that's 0.3% gain on that specific trade. You go over to the pound, the opposing setup that occurred on the pound was here. Now this was not from a pre-selected level, it was a newly created level. If you were watching the daily market preview for this day, and I would encourage the members to do that, the level that we had for this day on the pound, again December 1st, the level that we had was right here, was one spot 5,000. But what I talked about in the daily market preview for that day was I talked about this level right here, and I addressed it as right around the 65 point, 50, 65. And what I said is I just needed to see further, or wanted to see this level establish itself a bit more. In other words, create at least a 30% of the ADR bounce from when it comes back in and touches this. And that is exactly what we had, laid out that criteria. Came in for a secondary stop run confirmation off of that level. We had a valid confirmation off of that level. And in the video, for those of you that are members, this is kind of a little bit of a unique scenario, because in the daily market preview, for those of you, again, that are members, I just want to clarify this. You can go back and verify for yourself. So once we had established that criteria, it's a mechanical criteria for a level creation, we come back in, create the stop run, create the confirmation back to the upside. Unfortunately, very little follow through on this trade, only resulted in a 1.2% gain, which in this case was a 12 pip take profit, because our close was at 5 p.m., which is where we exit our trades if we carry any over. Best we could have eked out of that one wasn't really much more, because it didn't show much follow through to the upside. So at the end of the first day, 1.5% profit. Moving into the second day. The second day was a backside short. Now, this backside of a level trade, remember or I shouldn't say remember, but with any backside trade, we're first seeing the level break before it becomes a potential backside option. The level was 50.52, just to show you that. In the preview, here is the pound for this day, so December 2nd, 2015, and our lower level was one spot 50.52. Okay, so here's 50.52 right here, and we came into the backside, created a stop run, confirmed down from that point. So stop run confirmation came either here or here, depending on the broker difference. Some of you confirmed down in this candle, some of you did not. Either way, didn't really matter, because of the fact that whether this or this was the confirmation, the pullback here netted or came back to the entry point, I should say, and therefore this trade resulted in a 2% profit. Now you might look at this and say, well, why didn't it hit a full 4% take profit? A lot of you did, and so that's where some of the confusion may come into play. There was a news item that was right on the border of us being able to carry into it or not. For me, it had moved more than 15 pips on the spike in the past. Therefore, for me, it's a black and white no-go. In other words, I'm not going to carry into that release. If you did, well, you got rather fortunate. You ended up with a full 4% take profit. But for record-keeping purposes, we're going to call that only a 2% trade, which would have been the exit ahead of the news. And therefore, we're sitting on 3.5% profit at the end of the second day. Going into the third day, we flip back to the euro, and actually there was not another pound trade. So we'll flip back to the euro, and looking over here at the third, I really didn't care for this setup, but it's a valid setup nonetheless. It just missed getting canceled out. That's what I didn't like about it. We had news coming up on the euro, big news, the euro data we were expecting there at the beginning of the month, and came into the level. The level, our lower level on the euro was 0558, just to show you that here. December the 3rd, lower level 0558. So we come into 0558, we get a stop run right here. We get a valid confirmation up on the following candle, and then that results in a stop out before the news came out a little bit later in the day. So that was officially about an hour and 50 minutes ahead of the news, which was enough clearance to where we'll still consider the trade just barely enough clearance, but enough clearance nonetheless. Therefore, a valid trade, taking us down taking us from 3.5% up on the month down to only up 1.5% on the month. Now we have two backside trades that came up on the euro, and backside levels, I don't list backside levels in the daily market preview. In this December review, it really doesn't make a huge difference, but we skip over the weekend for the first one. And the first one was a great setup from a level that from a level that was a very substantial area where we're going to consider a backside trade. A backside trade, just by its very nature, without going into too much detail on a backside trade is a continuation trade by nature. It is, we're not trying to catch the first initial break. We're catching the retest of that point, essentially, the retest of the liquidity that often remains near the break, and waiting for a continuation of the initial move. So in this case, the reason that's such a good backside of a level area is this right here. If we go out and we zoom out a little bit, give a little bit of perspective, you can see once you break that point, there's really nothing else stopping the price to the downside. So that makes that a prime backside of a level area. In this case, didn't yield a great deal, was a full 1% trade, as it ended up being roughly 10%, or excuse me, 10 pips of profit in this case, which would have been 1% at the close of the New York session. That takes us back up to 2.5%. We go into the following day where we had another backside of a level trade. That was the second and final backside trade that would not be listed here on the euro. What you had is another scenario where there was really nothing to the upside that was stopping the price. On the 8th of December, which is what this day was, if I bring up the euro here, the first upper level we had was 09.76. So again, 09.76 was the first decent level to the upside. And what you'll also notice is this point right here. This is what I'll do sometimes when we have a clear backside option is I'll list a decent backside level. I don't list it as necessarily an official level. I say if this level still holds, because remember, if the point changes, then this number might change. That number might change. Excuse me. That's why I don't mention it. Anyways, 08.58 was the point where I was talking about being a good backside of a level option, and in fact, that is ultimately what we had occur roughly. Now, this is a prime example of why I said it would be a point that could change. Is that in this case we started to break that 08.58 level, and one thing we do is once a candle body breaks through a level, it is no longer a valid point, and that's exactly what we had moving forward. In this case, 08.58 breaks. It starts to breaks up even a little bit higher, and therefore we have to wait for a new level to establish itself, and that new level did not establish itself based on our mechanical criteria until this point right here. And we had a valid stop run of the backside of that point, confirmation up. 2 candles later, you had pullback for the entry at that time. So good entry from there. Another nice backside trade, backside long continuation type setup from that point. Another scenario where we had very little follow through, unfortunately. Still a 1% profit, but rather weak in my opinion in regards to some continuation. So takes us from 2.5% up, to 3.5% up total for the month. We go over to the following day, the 9th, and this is where one level which is 09.76 got us twice in a 2-day period. This was a great level, really big level. If you zoom out here on, let's just go to an hourly. You can see the significance of this point was the major overall high at that point. A lot of liquidity going to be stacked beyond that point, especially when you're dealing with a level where it puts another side of the market completely underwater. Anybody that was short over the last couple days would officially be underwater if that level starts to break. Market did respond short term, came very close to putting us in a break-even trade. Not quite enough profit to put us there. And 09.76, actually, let me show you that point real quick. Was our one and only upper point right here on the euro dollar, 09.76. So 09.76 comes in, creates a stop run, confirms down, gives the pullback for the entry, and results in a full 2% loss, taking us from 3.5% up on the month back down to 1.5% on the month. Like I just said a second ago, that level hit us twice in 2 days. Really big level. I love that level. It was not only a backside trade, or an original stop run back here, but also I thought it would be a great backside level. Even though this point failed, the market's still showing respect to that point. If we're going to continue, I felt like that'd be a great stop run point for continuation. On the 10th, we come back into that point just to show you this again here. So now we're on the daily market preview from the 10th, and the lower level we had is right here, 09.76. So we come into 09.76, stop run, confirmation, stopped out. We were up 1.5% in the month, and we're taken down to negative 0.5% on the month. The weekend, or we skip over the weekend, and we go over to the 14th, and we had a classic short trade here from 10.36. This was our final trade there of the month, and if we go back to the daily market previews, the one and only upper point that we had on the euro that day, one spot 10.36, big upper level, really nice upper point. Come into it, create the stop run, confirm down, give the pullback for the entry. This runs off for a full 4% take profit, and therefore puts us back at up 3.5% on the month. which is how we come to this number right here, and how we are now officially at a 178% compounded gain over the course of that 8-month period. Admittedly, December was a tough month. The New York session was definitely a bit easier because New York missed two of the losing trades, so New York was definitely the better of the sessions for this month. I always say that always varies between New York and London. There's not a you're not going to have one session that's heavily skewed much better than the other, and it tends to even out over the course of time. Either way, December was not a blockbuster month by any means. It was our lowest month on record since doing these videos, but it was only a 3-week month. We did not trade the last 2 weeks, so there's a little bit to be said for that as well. But ultimately continues a nice profitable streak there, and wraps up the month of December and the year of 2015. If you guys are interested in learning the DTFL bank trading strategy, interested in learning the setup that we teach, is one very simple setup that is taught repetitiously to ingrain the basic mechanics of the stop run and confirmation entry. If you're interested in learning that setup and really simplifying your trading down to one consistent setup you can get your mind around, the Forex course page on daytradingforexlive.com walks through our lifetime membership. It is a one-time fee for lifetime access. That lifetime access is to the course. Any updates to the course, any revisions to the course over the course of years, you'll have access to. Most importantly, you have access to the daily market previews. These videos right here, these 15 to 20 minute videos every single night, where you're able to hear me walk through exactly what occurred the previous day, but then more importantly, you're able to see the manipulation points I'm using for the following day, as well as what my current view on market cycle is. In other words, do we have a valid upward cycle, downward cycle, whatever it may be. So that's the second thing that you get access to. And then third, you have access to the live room. We run a room twice a week, Tuesday and Thursday. For those that can attend, we do record that room, so you're able to go back and watch it if you are not able to attend that session live. You also have access to the members forum. The members forum has a live chat option. Members chat with each other, go over trades they're setting up. A really nice option for interacting with other traders. And then finally, you have lifetime support from me in regards to DTFL-based strategies. So if you have any questions, feel free to email us at support@daytradingforexlive.com or daytradingforexlive@gmail.com. Either one will get to the same place. I'll be happy to respond to any questions that you might have. All right, guys, that is going to do it for this video. I'll see you all back for the next one. Until then, happy trading.